The ink on the SpaceX IPO wasn't even dry. The confetti hadn't finished falling, and Elon Musk is already cooking up his next move. A merger between SpaceX and Tesla that would create a $3.4 trillion company, the largest in the history of human civilization. Welcome back to Stockheads. While SpaceX was still on its IPO roadshow, CNBC reported that Elon Musk had been chatting with colleagues the possibility of folding Tesla and SpaceX together into one company. Not publicly, not officially, just chatting about it, as you do when you're casually considering merging $2 trillion companies over lunch. The market reacted immediately. Tesla stock dropped because when SpaceX's own amended S-1 filing revealed that it may issue, quote, significant equity in future transactions, investors put two and two together very quickly. That phrase, significant equity in future transactions, is the most expensive piece of corporate boilerplate ever written. 6 words that sent Tesla shareholders into a full panic spiral. Meanwhile, one analyst stepped into the chaos and poured rocket fuel on it. Dan Ives from Wedbush Securities, one of the most followed tech analysts on Wall Street, went on Bloomberg on IPO day and said there was an 80% chance Tesla and SpaceX merge within the next year. 80%. For reference, the prediction markets, where people actually put money on outcomes, put the odds at 33%. So we have a Wall Street analyst at 80, the betting markets at 33, and Reddit somewhere between this is obviously happening and Elon is robbing us in broad daylight. Let's just sit with the numbers for a moment. Tesla's current market cap, approximately $1.5 trillion. SpaceX, after IPO, crossing $2 trillion in its very first trading session, combined $3.4 trillion. To put that in perspective, that would make the merged entity larger than every company currently on Earth, larger than Apple, larger than Microsoft, larger than Nvidia, the single most valuable company in the history of capitalism. And it would have no profits. That's right, you would have the most valuable company ever assembled, built from a car company losing ground to Chinese competitors, a rocket company burning $4 billion a quarter, an AI company that Elon himself admitted was not built right, and the ruins of a social media platform that used to be called Twitter. But there is a business case. Let's hear it. Tesla is mentioned 87 times in SpaceX's own S-1 filing. The two companies already sell each other products. Tesla sold SpaceX Cybertrucks. Tesla invested $2 billion in xAI before SpaceX absorbed it. And Elon Musk himself has said publicly that he sees the companies converging. Starlink powering Tesla vehicles, Tesla batteries powering Starlink ground stations, AI running through everything. On paper, it almost makes sense. Here's where it gets complicated. And by complicated, I mean legally, ethically, and financially messy in ways that would make a corporate lawyer physically sweat. This would be Elon Musk's 4th major self-deal. Let's run the history real quick. Deal 1, Solar City. Tesla acquired Solar City in 2016, a company chaired by Musk's own cousin in which Musk himself held shares. Tesla shareholders sued. Musk settled for $56 million in 2022. Deal 2, Tesla's $2 billion investment in xAI, Musk's own AI startup, in January 2026. Tesla shareholders had previously rejected this proposal. It happened anyway. Deal 3, SpaceX then acquired xAI weeks later for roughly $250 billion. Musk then admitted xAI was not built right and needed to be rebuilt, after everyone's money was already in. Deal 4, this, the big one. Here's the structural problem that keeps lawyers up at night. Musk controls 85% of SpaceX's voting power through Class B shares, shares not available to the public, carrying 10 votes each compared to the 1 vote retail investors got. So on the SpaceX side of any merger, the only person who can vote it down is Elon Musk. And on the Tesla side, Tesla shareholders do get a vote. They would need to approve any deal, and a lot of them are already furious. Gary Black, managing director of the Future Fund, put it bluntly. Institutional investors he knows hate the idea of a combination because they prefer pure plays. And conglomerates, in his words, nearly always gravitate to the lowest common multiple. Translation, when you mash 2 companies together, the combined stock tends to trade at the worst of the 2 valuations, not the better one. Now let's talk about the number that is making Tesla shareholders physically ill: 28%. That's how dilutive Gary Black estimates this merger would be for Tesla shareholders, meaning if you own Tesla today and this deal goes through, your stake in the combined company could be worth roughly 28% less than your Tesla stake is worth right now. Here's the cold maths. Using current valuations, $1.45 trillion for Tesla, $2.52 trillion for SpaceX, Tesla holders would end up owning only 37% of the merged company. 37%. You brought 1.45 trillion to the table and you're walking away with 37% of a $3 trillion entity that Elon Musk controls with 85% of the votes. One lawyer at Columbia University gave a particularly brutal warning. Tesla shareholders with concerns about the merger will have trouble getting out post-merger if it occurs close to the IPO. In other words, if you're a Tesla holder and you don't like this deal, you better decide fast, because once the merger closes, the exit door gets a lot smaller. Okay, in the interest of balance, and because this channel is brutally honest, let's hear the bull case, because it is genuinely compelling. Tesla influencer Alexandra Mertz pushed back hard on the dilution narrative, arguing that a merger of equal structure could actually add $450 billion to Tesla's valuation, not destroy it. Her argument? Starlink plus Tesla's autonomous vehicle fleet plus Optimus robots plus XAI Grok running through all of it is not a conglomerate. It's a vertically integrated AI and energy empire the likes of which has never existed. Think about what you'd actually be buying. Tesla's robotaxi network, already rolling out in multiple US cities, generating recurring revenue from autonomous miles driven. Tesla's Optimus humanoid robot, potentially the most scalable physical labor product ever built. Starlink's 10 million subscribers growing by up to 1.5 million per month. SpaceX's launch monopoly, the only company that can economically get large payloads to orbit. XAI's Grok running as the intelligence layer across all of it. And orbital AI data centers, powered by solar, beamed down via Starlink, with Google already signed as a customer at nearly $1 billion a month. Musk himself has predicted SpaceX alone hits $1 trillion in revenue by 2030. If even a fraction of that ecosystem actually delivers robots, taxis, satellites, rockets, AI, then the combined entity isn't a conglomerate. It's infrastructure for a world that doesn't exist yet. So what does all this mean if you're a regular person who just bought 11 shares of SpaceX through Robinhood because you couldn't afford to be wrong? Option 1, you're holding the most innovative company in human history at the ground floor of a $3 trillion empire. Congratulations. See you on Mars. Option 2, you are exit liquidity for a deal that Elon Musk is negotiating with himself, using voting rights retail investors don't have, to combine two loss-making companies into one giant loss-making company at a valuation the market made up. Option 3, and this is the most likely, nobody actually knows. Not Dan Ives at 80%, not the Kalshi prediction market at 33%, not the Reddit user who said, "Just give me my cat girl robot waifu already, Elon." So, here's the state of play. The biggest IPO in history just happened. The company is already worth $2 trillion. The man who runs it controls 85% of the votes. He's done this 3 times before. Analysts say there's an 80% chance he does it again. And the deal would create the most valuable and most unprofitable company in the history of Earth. Is this visionary, or is this the longest, most expensive magic trick ever performed? One Reddit user said it better than any analyst on Wall Street. People are buying into Elon's hype. They're buying into the fact that the system's rigged, but while the tide's rising, maybe they could catch a ride. Maybe. Just make sure you know where the exit is. Like, subscribe, and for the love of tendies, not financial advice, never financial advice.